asking. Jared, what can you tell us just about the moves we've seen since that decision was announced yesterday?
Well, I want to dial it back a little bit farther because there's a dance that evolves. Yesterday, we had all the fireworks. That was Wednesday, but we got some leaks a couple weeks ago. So let's go to the Wi-Fi Interactive. I have all of this plotted out, and what we're going to start with is a chart of SPY. That is the S&P 500 ETF, and we're going back 12 days. So here's the current price all the way on the right, but 12 days ago on October 21st, that was a week ago last Friday, we got this tweet. In fact, it was an article, too, by Nick Timiraos. He's the Fed whisperer over at the Journal. He said the Fed is barreling towards a fourth straight 75 basis point rate rise at the November FOMC meeting. That meeting could serve as a critical staging ground for future plans, including whether and how to step down to 50 basis points in December. Step down is a key word there because later on that morning, Mary Daly, well, she had some comments. She's the San Francisco Fed president, and she was at an event, and she said, in my judgment, more is needed for restrictive territory. That would be more rate hikes. And she also said we need to watch how restrictive. We cannot over-tighten either. This requires a step down. There's that language, into smaller increments of hikes, and the step down should be considered now, but the data is not cooperating. That's because inflation is too high. We should think hard about step down, but we're not there yet. And we can see what stocks did. Now, this is over several days, and there were a lot of other factors. I mean, you fold in earnings into this, yes. But we reached a critical level in SPY that corresponds to 3,900 in the S&P 500. You can see price was kind of sticky there. This was an ideal entry for shorts based on technical considerations. And I just want to show you what happened yesterday because we did get, and I'm going to put a two-day view, we did get a spike up on the announcement. I'm going to remove some of these annotations here. We got that spike up, and that was on the FOMC statement. They added some key language here. I'm just going to highlight and read it real quickly. They don't usually change the statement that much, and so changes are really in focus. In determining the pace of future increases in the target range, that's of their federal fund rates, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial development. So in other words, they're saying, yeah, we know that we've tightened a lot so far, and that's just fine. We're aware of the lag effects, and markets seem to like that. They thought Jay Powell and the Fed were stepping up to a step down. That would be in December. Now I have some comments from Alf. I'm going to be interviewing him. He's from the Macro Compass in an episode of Yahoo Finance Uncut next week. Really excited about that. But I just want to show a few things that he said about that he's quoting Powell. He's saying the incoming data since our last meeting suggests that the terminal rate of Fed funds will be higher than previously expected, and we will stay the course until the job is done. What's far more important now is how long rates will remain high, and we will stay the course until the job is done. Stay the course. Risk management is key here. If we were to over-tighten, we could use our tools to support the economy later on. That is, we could dial things back and fix it. But if we fail to tighten enough, inflation would become entrenched, and that would be a much bigger problem. So contrary to the Fed over the last, 10, 20, 30, 40 years since Volcker, guess what? They're going to err on the side of tightening too much. And if you want to see what they're really talking about, if you hear Powell saying we will keep at it over and over, this is the reason why. Keeping at it, guess what? That is the title of Paul Volcker's book. And he was the one fighting inflation way back in the day.
He was, and it was really amazing just to watch the volatility that we saw play out, specifically yesterday afternoon. The markets wanted to cling on to any note of optimism, but Fed Chair Powell's comments really solidified that the Fed is far from done. At least it sounds like
they're going
to
keep at it.